Hi everyone. Now Boohoo shares down 72% in the last year. Performance of my portfolio is at stake, and maybe yours if you hold the stock, or perhaps if you're intending to buy. So let's take a look at their most recent results as we find out if Boohoo is on the road to recovery. If you're a shareholder with Boohoo, and I know several of you who watch these videos are, let's see, this is the performance of the last 12 months. It's a pretty depressing sight, but alas, there is hope, because if we look back last year, it looks bad. But this is the last 5 days. It looks much more positive. Let's look at what's going on. There's some very key information Boohoo's released through a trading update. So I'm going to compare the most recent trading update to the previous trading update that I released and analysed during my last Boohoo video about 3 months ago. And we'll be able to explain then what's going on and what that means potentially for shareholders. So the Boohoo share price did drop dramatically several months ago due to the guidance that was released that I've highlighted. But going forward, they're expecting between 12 and 14% as their guidance for the year in terms of revenue growth. It was previously 20 to 25%. So the key news here is that the group has delivered net sales growth in the fourth quarter of 7%. Over the full year, that's 14%. In line with guidance. So at the top end of their previous guidance for revenue growth for the period. So the reduction in revenue that they'd seen, that trend has now been stopped. And they are still growing. They're growing at over 10% a year. That's still a pretty decent rate of revenue growth. And they are expecting that to continue going forward. So we shouldn't expect this sort of 25% a year that they had been doing before. It looks like there might be another 6 to 12 months of this lower percentage figure. But their long-term goal is still to grow revenue at 25% a year. Now, last time in terms of the UK market, we can see, looking at the screen, that the 1 year change in growth sales 32%. In the trading statement now, we have the group delivering strong trading performance in the UK. So the good news is their core UK market, which is by far and away their largest revenue sector and their fastest growing sector, has continued to grow and perform well. International performance, as before, has been impacted by supply chain issues. So in their last trading results, we can see that there are much longer customer delivery times due to some of the distribution issues. Now, that is still the case, and given the increase in costs of distribution at the moment, I can't imagine that this is going to resolve itself quickly, but over time, it should improve. So sales-wise, it's been positive news. That explains part of the share price jump. However, let's have a look at the profitability. And one measure of profitability is EBITDA, perhaps not the best measure, but it's a decent measure for growing companies. And in the results last time, they said 6 to 7%, which was much lower than the previous 9 to 9.5% estimates, so expecting much lower EBITDAs. And that would be 117 to 139 million within that range. And they were talking about increasing costs, particularly around distribution. So what they've actually come out with in their most recent results is that the EBITDA should be about 125 million, subject to audit. And that's bang in the middle, really, of that guidance that they'd issued before. And the analyst consensus was also 125 million, conveniently. So therefore, their profitability, as well as their sales growth, is in that zone that they previously guided and in line with expectations. So the market has reacted positively. So Boohoo, we say from Warren Buffett that he says the market, in fact from Ben Graham originally, I think the market is a voting machine in the short term, so popularity, and a weighing machine in the long term, so based on fundamentals. So in the short term, Boohoo had been very negative because the last thing they released was negative results. Things were getting worse. Share price kept dropping. As in terms of voting, Boohoo's position was not popular and declining. Now that these results have come out and stabilised that and probably put a baseline on it, we hope, suddenly it's not as unpopular as it was, and that explains why the share price has increased significantly in the last week. I think that is positive news for Boohoo overall. Those of us that shareholders and stopped with them, now we're seeing an improvement in our position. Now, just a little glimmer of hope for perhaps some overperformance. So in the last review, we saw that the rest of the world's sales growth in the previous year was minus 21%. And now saying in the fourth quarter, group saw a return to growth in the rest of the world due to positive contribution wholesale. So that rest of the world figure, although small, looks like it might be starting to pick up and is no longer negative. So there could be some future upside. And I'm not really sure we're seeing the results of the Debenhams acquisitions, for example, flow through to the results yet. So I think there is still further upside over and above the results that they've released, which is why I am going to continue to hold my position. If you're interested, here is my position, and the percentage figures on a compound annual basis. So yeah, it's been pretty negative so 50% down overall. Certainly a lot better than it was a couple of weeks ago. If you are interested in this tool, by the way, share site, so it logs in all of your trades. It does automatically link into some brokerages. It'll give you sort of a cost average here, £1.89. There's my cost average. And it'll allow you to put sort of labels and categories on things for reporting. If you'd like a 10% discount on that, you can use my referral link in the description below and check it out. So on a valuation perspective, that's the next thing we're going to have a look at. So 125 million EBITDA, enterprise value is around about billion. So that's sort of a 1:8 ratio. Now, anything lower than a 1:10 ratio suggests there might be some value there. Yeah, it still looks cheap compared to the guided EBITDA. And it's a company with a strong balance sheet and very low debt as well. So here's the debt to equity, just showing on the balance sheet, and then in sort of graphical format here. So it's a good balance sheet. So they're not going anywhere. They're growing. They're profitable. It's not all doom and gloom. This is still a decent company, still a good company. Now, there's some analyst expectations put on Simply Wall Street here, and they're suggesting an EPS of about 10p a share, 2025 in 3 years' time. And that would be a forward PE therefore around about 9 based on the current price. So that sounds quite cheap as well for a company that is growing in double-digit percentage rates. They've got 33% forecast annual earnings growth based on 22 analysts. So according to Simply Wall Street, at least as a source, this has got a PEG ratio of 0.6. Anything below 1 suggests that a growing stock is potentially undervalued. Having said that, their valuation metric suggests a fair value basically where the price is now, so in the sort of 90p range. But that is using a free cash flow model, which I don't think is the best way to value Boohoo because it is a growth company. My executive summary here is that the trading update is more positive than the previous update. The company still has a low risk of failure, the company is still growing sales, and the company is profitable. Therefore, I'm going to hold. This isn't financial advice to you, I'm just sharing information. I don't know your circumstances, so do make your own kind of decisions, do your own research. If you really want to impact your portfolio, click on screen now and you'll have a look at a company here which I think is an absolutely cracking investment.